Financial systems are not designed by people who are stupid. There are lots of inefficiencies in them. It doesn't mean that it's stupid. It was probably super intelligent for a specific set of circumstances that have since changed. T+2 makes a lot of sense when you need to actually manually process trades. Tickers, being called tickers and only having 4 characters, makes a lot of sense if you realize there used to be a ticker tape, which was literally a piece of paper that would print these things on them. And longer tickers could result in more congestion in the printing of the prices, which could result in a delay in information. That all makes perfect sense. It is, however, in a digital version of markets, completely irrelevant. Doesn't mean it wasn't intelligent when it was done.
Hello, everybody. Welcome to a new episode of the Bitcoin Equities Talks. Today, I have with me Ophelia from 21Shares. Can you please present yourself, Ophelia, and your company?
Yeah, of course. Thank you so much for having me. So as you said, my name is Ophelia Snyder. I'm one of the 2 co-founders of 21Shares and 21Co, our parent company. 21Shares is the largest provider of crypto ETPs and ETFs in the world. We run about 50 different products in 3 major markets. We have products in the United States, products that cover the European market, as well as Switzerland, and products in Australia. We also have some footprint also in the Middle East. So we've been building this business for about 5 years, and we manage just under $7 billion in assets today.
Okay. So, I don't think there's any truly global or as global as you are in terms of crypto asset manager that covers so many jurisdictions, is there?
No, we are the most global. We're essentially present in every market where it's possible to launch products like ours, with the exception of Canada.
And why did you avoid Canada? Any reason?
Oh, there's just a lot of high quality product there, and it's a relatively small market that has a fairly heavy a local bias. So it just wasn't the right thing for us at the time. But we offer products, like I said, Switzerland, all across the European Union. Hopefully soon the UK. We've had listings historically in Dubai. We've a partnership with ARK in the US, and 6 different products there, and a partnership with GlobalX in Australia.
Okay, so before we dig into your current situation, can you explain a little bit the background of the company, how it started, like the road to becoming a global company as you are?
Yeah, so it honestly some pretty humble beginnings. You could probably say so the company properly started in 2018 when we launched our first products like 5.5 years ago. But the reason the company started is maybe a little earlier than that. In 2013, came home from school. I was in college back then, and I went to go visit my mom. And she started talking to me about how, cross-border payments don't make any sense, and Merck spends too much money hedging. And if you believe in globalization and you believe in global trade, we really need a unified means of exchange and a standard for the world. Have you heard of a thing called Bitcoin? I'm like, no. What are you talking about? I've never heard of Bitcoin before. And so that is how my mother introduced me to Bitcoin in 2013. But interestingly, she didn't invest in Bitcoin directly in 2013. She actually made a few investments in and around the ecosystem with startups that she felt a little bit more comfortable with, but she didn't actually invest in the underlying asset. And a large part of the reason that she didn't is because there wasn't a good way to do that, right? Keys, passwords on a bearer asset. So, if anything happens, it was gone. Her financial advisor couldn't help her. The only products that existed, there were essentially none, or they were extremely expensive or poorly structured. It was sort of a situation where it was, our sector wasn't designed to be welcoming. And it's interesting because for somebody to completely understand Bitcoin, the role of Bitcoin, why we need Bitcoin, what we hope to gain from this industry and what we hope this innovation brings to the world, but to not feel comfortable actually allocating because the infrastructure was prohibitive is kind of crazy. And so that was the inspiration to start the business, was to actually provide a product for my mom. And
Back,
originally we didn't
back
just
since 2013, wow. But you
yeah,
only listed it in 2018, so it was 5 years in the making, basically.
yes, exactly.
Oh,
So it was
okay.
quite impressive from that perspective.
Yeah, I suppose you had to spend a lot of time going all through the various regulatory jurisdictions where it would be most deemed fit to launch a product and how to launch it and what kind of product. This what took
Yes.
you like 5 years?
No, we launched product originally 5 years ago. So we came out with HODL in 2018. So 5 years before that. I was doing other things and it was something that I then followed for many years. And
Okay.
it took a while to see if, there were more people like my mom. And honestly, I was quite young back then, so it took a little bit of time for me to feel like it was the right moment to actually start a business.
So 2018, you automatically found the right team. How was the process of like setting up the company and listing the first? Where was the first listing that you've done?
The first listing was in Switzerland. So we launched the world's first physically backed crypto exchange traded product anywhere in the world in Switzerland. And I'd actually never been to Switzerland before we decided to start a company there. So it was challenging. Hanny and I showed up in Zurich the first time to pick up the keys to an apartment that we'd rented that was also going to be the office. And we spent the first day frantically building lamps and beds and places to stay and desks. And that was the start.
But where were you living before that?
New York. So
So
I'm
you moved from New
American.
York to Switzerland just to launch this first ETP product.
Yes.
Wow.
So I'm American and Italian. Hanny is American and Egyptian, and neither one of us had really any ties to Switzerland. We ended up in Switzerland because regulations on crypto assets were very transparent, very clear. There was a sense of like understanding of the types of structures we were trying to do from their history with gold, and quite frankly, the inherent neutrality of the country were really appealing in the context of in the context of building a business like this.
Yeah, I mean, Switzerland in Europe in general and worldwide has a very sophisticated financial hub. And you're not the only company who went there. I mean, the Crypto Valley is in Europe is mainly a lot of the crypto ecosystem is based in Switzerland for all these reasons, I suppose.
Exactly. And so it made sense for us to start there. And, we expanded from Switzerland, obviously, to distribute these products in the rest of the EU and into the Middle East from the European base. And then Australia came a little bit later with some regulatory movements on that side. And then the US obviously really just got started a couple months ago.
Okay, so the most recent launch is you were like one amongst the 11 SEC approved Bitcoin ETF launch, and from my understanding, you did it in partnership with ARC.
Yes. Yes, so we launched a partnership with ARC actually several years ago, specifically to bring these types of products to market. And the partnership now covers a full digital asset suite, a spot Bitcoin product, as well as 5 actively managed products in the crypto space.
Okay. And how was the process of the whole SEC approval and the ETF and the asset raising? How I suppose like last Christmas and New Year's were very busy on your side.
Yes, very. I think the January 10th date that all these products got approved of was actually our date, the date where the SEC had to decide on the ARC 21 shares filing. And it's actually a date that we picked really carefully because we knew it was going to line up with with Grayscale and the Grayscale lawsuit. We knew it was going to line up with you know a robust time of year from a distribution perspective. You can get a lot done in Q1. I think we all know that. There's typically a lot
Yeah.
of velocity of work in Q1 when people come back, and it's a really strong time to bring new product to market. So it was a very calculated choice as to when we filed that product 9 months earlier, but realized at the time it was extremely controversial. Nobody thought this was going to get done, right? 9 months before
But
January.
9 months before, the date never changed. It kept
No.
because if you
So
look
it's
at the Bitcoin or the Ethereum ETF applications now, the date keeps changing because the SEC is asking for postponements.
so actually the date's not changing, and that's a common misconception. The SEC has, from a statutory perspective, a maximum of 240 days. Each one of those postponements is part of a statutory process to get to the 240 days. But the
Okay.
240 days never changes.
Okay, I see.
Does that make sense? So each postponement within the period just gets you to that 240. There's a certain number of preordained postponements they can have.
Yeah,
So you always know what day it's going to be.
but I mean, I've been following the space since 2013, and since 2013 there have been like Bitcoin ETF applications, and then they get like. So what you're saying is that after these 240 days, all the ETFs that were applications that were applied before were just refused.
Exactly. So they have 240 days to either approve or deny. So historically, it's been a lot of denials.
Yeah, I mean, just how it happened and the configuration in which like 11 ETF applications get approved at the same time, I think it's a world's first.
It's never happened before. And there's some pros and cons to it, right? It's not ideal from rewarding innovators who actually put the work in to get this done, right? Versus people who'd been working on this for years versus people who maybe arrived at the, ninth hour and didn't do as much to get it done. But I do think it was ultimately very good for the industry.
Yeah, I mean, everybody, at the end, when you think about it, having 11 issuers makes it stronger case than if you had only one, because you have like the cake is much bigger. So each pie is also bigger. Don't you think so?
Yeah, definitely.
Because I believe like you have like 11 of the best asset managers in the world talking every day to their client, convincing them to buy Bitcoin ETFs. And for me, it's like just a phenomenal marketing tool for all the ETFs and for Bitcoin itself. And then the performance follows, which bring more attention to your ETF. It's like a virtuous circle going on, right?
It is. It is. And there is a certain element of legitimization that's coming from this to some extent. And I know for those of us who've been in the space for a long time, it's kind of hard to hear, but you do need brands like this. You do need people who have these backgrounds to stand up and say this is a good idea. I think one of the things that crypto sometimes forgets is history and actually what asset managers do. But both of those things kind of simultaneously. Systems generally, financial systems are not designed by people who are stupid. There are lots of inefficiencies in them. It doesn't mean that it's stupid. It was probably super intelligent for a specific set of circumstances that have since changed. T+2 makes a lot of sense when you need to actually manually process trades. Tickers, being called tickers and only having 4 characters, makes a lot of sense if you realize there used to be a ticker tape, which was literally a piece of paper that would print these things on them. And longer tickers could result in more congestion in the printing of the prices, which could result in a delay in information, which could be extremely dangerous in terms of market efficiency. That all makes perfect sense. It is, however, in a digital version of markets, completely irrelevant. Doesn't mean it wasn't intelligent when it was done. That is true of financial systems, right? Intermediaries are not there because people who designed these systems were uncaring or leeches just looking to take their cut. That wasn't the idea. By the way, same with banks, right? Banks and bank balance sheets were designed originally, if you think Medici-style banking, to allow for ease of transfer across large geographies, and bearer assets were dangerous for that. A lot of these elements that we bake into our financial systems, they have very legitimate reasons for occurring. They just may no longer be relevant. One of the things that has happened with this ETF launch is that I think people underestimated what the actual thing people pay advisors for is, which is actually advice. Most people don't want to manage their own money. Most people don't want to process their own wire transfers. Most people are very happy to pay somebody something to take that job away from them. In the same way, by the way, I could probably, under the correct circumstances, repair my laptop if I was willing to spend a sufficient number of hours learning how to repair a laptop. Or I can go to Apple, give it to them for a day, and get my laptop back and not worry about it and have paid them the whatever I pay them every month for insurance on repairing my laptop. It's a very similar type of transaction where most people, most of the time, don't want to manage their own money. They maybe want to spend a couple hours a month on it a couple hours of quarter on it maximum. And I think that is something that we oftentimes forget. So when you have big asset managers who are working with these intermediaries to actually provide people with access points, it's really helpful for people like my mom, right? She doesn't manage her money actively. She's not a day trader. She has no interest in being a day trader. That's not her job. That's not what she wants to do. She's an author and an artist, and she's wonderful at those things, and she has no interest in making her life trading stocks or trading crypto assets. Now, for some people, we want to make our life that, and we should have the right to do that, to be clear. But that doesn't mean that's everybody. And so providing a way for people to access these assets within a more standardized structure actually means that they're going to. And they're going to feel comfortable about it, and they're going to be excited about it. And they may become wonderful evangelists for the space, and they'll become people who fundamentally understand that, yes, Merck spends too much money currency hedging, and yes, we should have global payments rails and a global means of exchange. Yes, that's great. Do I then want to figure out how a, wallet works? Absolutely not. And there's a fairly big infrastructural leap between those two things. And the arrival of these ETFs really does bridge that gap. We did that in Europe 5 years ago. We're doing it now in the United States. The US is still is the largest capital market in the world, and therefore critical in terms of making this work. And you do need that audience. Not everyone is going to want to sign up for a Coinbase account.
Yeah, I mean, I totally hear you because the way I see it is like the ETF is one stepping stone towards the hyper Bitcoinization or whatever world we're going to. So you would need the financial advisor to get educated, and then you would need also the industry to level up. I mean, today you can hold your own coins, but the user experience, I think about my dad too. It's like impossible for them to go through the whole user experience to have your own custody of your own coins, and then you get like so many risks, risks of getting hacked. I mean, since we launched our Bitcoin equities ETF, I've never received so many phishing emails, so many attempts to hack into our accounts, our emails, and they're really, really. I mean, I've always had like spams and phishing emails, but the level of phishing and maliciousness with scammers is super high. So if you're not like really, really fit on self custody, then and I think the technical solutions are there, but it's not like as user friendly as opening a Gmail account and to affiliate or stuff like that.
But also, what benefit are you getting from self custody? And I think that's the question, right? For certain people, they are getting real benefits from self custody.
Yeah, I mean, if you're living in the US or in Europe, you don't have as much benefit than if you're living in an authoritarian regime or in a part of the world where the banks are not servicing you. I mean, I'm from Lebanese origin, and I can tell you the banking user experience is like one of the worst in the world. So you have like a better alternative going into self custody. But for US and European based investors, the ETF does very well the job. There's also another aspect which I haven't found yet the real solution. It's like not as user friendly as the ETF, is the transmission. Like if I die, how do I transmit my coins to my children and so on? So I have to take all the legal notary steps and make sure that the keys are like are held by multiple persons or multiple companies, and so it's not like I click a button and boom, everything is sorted, which is the case with the ETF. And maybe down the line, everybody, like all the new generations, will get like educated, and for them it will be like automatic self custody. But I think maybe in 10, 20 years, not in the immediate times.
And then look, I think it goes to the next question. If you self-custody, I think there's this idea that you can only use one solution. I don't think that's true. For example, me as an individual, I have self-custodied assets that I use for certain things. I have on-exchange assets, and I have ETFs.
Yeah, me too.
I have all three. Of course I
Actually,
do.
yeah.
All in crypto, by the way. All in Bitcoin, by the way.
Yeah.
Why? Well, actually, there are different reasons why I may want one or the other. And that's fine. But I think that mix and match approach is very real. I think there's also you make a very good point about inheritance. Inheritance is a huge issue in crypto, right? You want people to hold make generational wealth in crypto assets. That's great. You've made generational wealth. Congratulations. You get hit by a bus tomorrow. Chances are your children have no idea how to get access to these assets. I actually know a couple of people that's happened to, let alone somebody who's, significantly older and actually thinking about estate planning and how to leave money for their descendants. It's not a very straightforward process, and there can be material losses there. And I think that's something to realize, that for a large proportion of the investing public, that is a really big deal. And
Mm.
if you think about who actually controls wealth, right? So you can look at this from two perspectives. You can look at this from, I think, uh, Bitcoin especially, but honestly, all digital assets to some extent fall under this umbrella. You always have two ways of looking at it, right? You can either look at it as an economic asset, or you can look at it as a technology, and it is always both, right? But depends what you're trying to do. If you're trying to use the technology to better manage remittances, that's very, very different than if you're trying to gain exposure to a store of value, right?
Mm.
And yes, you can do both with Bitcoin, 100%, but the way in which you do that is different. So if what we're trying to say is that store of value is going to be important and you want to start seeing Bitcoin on bank balance sheets, the issue with bank balance sheets is bearer assets. If you're a pension fund managing a bearer asset from a security perspective, are you willing to risk your career on how well you set up Coinbase? Are
Mm.
you willing to risk thousands of people's retirements? Probably not. It's not worth it. You're better off outsourcing that to somebody who actually knows what they're doing. It's not going to be, you know, problematic for you. And I think that's a piece that people often miss. This is definitely mix and match, and different people are going to have different solutions. And we all still want somebody managing our pension plans, right? We all still want pensions. Somebody needs to manage that. That's
Yeah,
always going to be a managed service in some way.
yeah, totally.
We all still want advice on what equities to buy and how to best think about building our own portfolios and saving for retirement, and how do I write my will, and intermediaries are not inherently bad. There's a way to make them more efficient, because let's all be realistic. I don't think anybody thinks, no one's really, really, really excited to pay Goldman Sachs to process a wire transfer for them,
Mm.
right? But we are really excited potentially to pay them for really high quality research. And those are very different skills. And I think that's something that has maybe sometimes gotten a little bit lost. And so when you think about self custody, it depends on what service you're trying to get.
True, true. There's also another point that I would add is the fact that I don't think the governments and the supervising authorities have stepped up to the potential of, if you lose or get hacked or get scammed on your coins. I mean, Bitcoin is the most traceable product out there. Like it's not like losing your jewels or your watch or whatever. Like it has like a superior capability of tracing and finding the thief, basically. So I think like with time, it will also be the self custody is not. We don't have like we had an incident in our office where we had a fishware and they managed to steal 3 bitcoins from us. And I
Oh,
went to
wow.
the authorities, and they told me you have to prove that there was an intrusion. I said, how do I prove there was an intrusion? I said, yeah, because usually when you get, if you left your doors open and your safe open, and somebody came and took your watch, it's not considered as theft because you like invited them to come. It needs to have like an infraction to your apartment or to your office, etc. So I had to find a way to prove that somebody came into the server and installed a malware on one of our computers that changed the address when I sent Bitcoin. It's impossible, I was like, and since that was like in 2014 or something. So since the authority have developed the means and the tools to understand how this works, and but they still are incapable of chasing, or they chase if it's terrorism or if it's like very high flying crimes, but not for the pops and moms who got stolen or scammed a couple of bitcoins. There's actually a lot of work that is still need to be done to feel that when you self custody, okay, you're responsible, but at the same time you have some recourse in case you lost them, or you got not lost them, but they got stolen from you.
I mean, look, I think the whole point of self custody is you're trying to avoid most of the places where you would have recourse, right?
Yeah,
That's the whole point. Is
yeah.
that normally if a bank sends what you're talking about is a form of insurance, right? Because law enforcement and insurance are actually different. Because if we think about going back to an iPhone as an example, if I leave my iPhone somewhere or somebody picks my pocket and steals my iPhone, law enforcement is not going to find my phone.
No.
That's just not a realistic thing. And I don't think anybody expects them to. Now, if somebody steals a painting from the Louvre, that is a very different issue than if somebody steals my iPhone, right?
Mm.
And stealing a little bit of Bitcoin is going to be much closer to an iPhone than it is to a painting in the Louvre, right? Like we don't realize how high that threshold is for this not really being a thing someone's going to get involved in. But I can get from Apple theft insurance.
Mm.
And Apple will bear the responsibility if somebody steals my iPhone or if I break it and run it over with a car, right? Apple will insure that and absorb that risk and I pay them for it. Once you start removing intermediaries and you start removing other balance sheets and you start removing checks and balances and you start removing institutions and institutional grade security, you start to which you're no longer paying for, which is great, but on the flip side you're no longer getting that what is effectively an insurance policy from them, right? Which is we guarantee that your assets are safe and we guarantee that they get to where you tell us to send them. There was a scandal with I think who was it, like Credit Suisse maybe a couple of years ago, who transferred assets to the wrong place and couldn't recover them. The bank ate the loss, not the customers. And that's
Yeah,
part of
sure. Actually, they went down because because of that. I mean, partly because of that afterwards, a couple of years after. It's true.
but it's their responsibility, right? Not the
uh,
responsibility
I
of the deposit.
agree. Talking about insurance, that's a critical point I find in the whole ETF landscape because, I mean, Coinbase custody is insured, but not to the full amount. And don't you think like the next step that we're still missing in the crypto ecosystem is like big insurance stepping in after like we've seen the big asset managers stepping in, to have like big insurers stepping in to safeguard or guarantee the safeguarding of the assets?
So, I mean, you already have quite a few. For example, like look, a few of the big insurers actually do issue insurance policies. They just don't issue them to individuals. Most big institutional custody in crypto today is insured.
Is insured?
Part
Oh,
of the reason
okay.
why things like ETFs make sense is that there are significant insurance policies that cover those assets and cover institutional grade custody. But realize like the differences between self custody and the custody an average person can get from Coinbase or the custody 21Shares gets from Coinbase are not the same product,
Okay.
right? So a self-custodied wallet is only protected by how well you manage that private key. An exchange wallet is only protected by how well you manage your password because most of the time compromises are based on user error, right? No one's hacking underlying wallets. It's typically user errors or malware on a computer that you're using.
Hmm.
Institutional grade custody looks completely different, right? You're talking like military grade vaults where you've stored multiple copies of keys that have been sharded. You've got multiple access points. multiple confirmations from encrypted computers and air-gapped computers, such that you're able to actually produce a end-to-end secure, multi-step, verified by 5 individuals transaction before the transaction can process, all on separate hardware.
Oh,
The
wow.
ability to actually intervene anywhere in that cycle is much more difficult because, yes, you could compromise one step, but that one step is not going to release assets. And so when we think about our custodial setups, we manage hundreds of wallets across the world, and they are all managed with an extremely rigorous process around it. Both the underlying security, how and where the private keys are stored, as well as the procedural steps required to actually release those assets and where you're able to release them to. So, whitelisting, test transactions, limitations on withdrawal sizes. I mean, there's some pretty significant barriers to actually being able to move these assets, and it's done by design. Now, it's done in such a way that the ETF can still trade as a liquid asset completely normally, T+1 creation redemptions, no issues on any of that. But within that time frame, there are hours of work being done by people to actually complete a security process such that those types of issues don't happen. And by the way, those types of things are insured. Yes, you can insure that. That is
Okay.
an insurable thing.
Oh, wow. I didn't
But
know that. I thought, okay. So, but that I didn't see it neither in the filing or in any disclosure, or maybe they are and I missed them. Do
insurance
all
provision,
ETFs have the same type of institutional grade custody solution, or like it varies from one to the other?
it varies, and it also varies on how you implement it. So, for example, we've been doing this for 5 years. We've seen a lot of stuff in the industry. We've seen forks and airdrops and hash wars and pretty much any horrible thing that can happen on chain. We've seen it. So we've configured our custody in the way we would like. So if you go to Coinbase and you get institutional custody from Coinbase, that custody is configurable. How you configure it is up to the issuer. And obviously, we're not going to disclose every one of our security provisions like that. It's very clear, we keep 100% of assets in cold storage. We've detailed quite a large proportion of it, but there's obviously a lot of subtlety that goes into securing these assets,
No, but
which
I
is
would imagine it would be a differentiating factor that you would promote yourself doing. But I suppose like the differentiating factor is your track record in the space compared to the newcomers who just stepped in, and so one of the advantages I would say into buying your ETF versus the others is all this expertise you have since 2018 into managing and holding crypto assets and safeguarding them. Well,
yes.
how else do you differentiate yourself from your competitor?
It's a few things. You're right about the operational expertise, and we've actually built out a full system called Onyx that supports this. It's our research and our client service. So we're a crypto native firm, but we've been in the space a long time. So we produce free, extremely high quality research covering every asset that we have a product in every geography we have it in. We publish that research in 6 different languages so that it's broadly accessible. We and obviously we have a wonderful team who are able to support our customers as they go through these different cycles. We had a Luna product during the Luna crash, and the type of customer support we were able to give people and the type of clarity they had in the investments they were in means that most of our clients actually understood what those real risks were, felt comfortable with having understood them, knew what the downside case was. And when it came time that there was an issue, we were able to keep our product operational longer, keep it trading longer, keep our clients more informed. And we actually ended up picking up quite a few large clients from competitors who weren't able to provide that level of detail and clarity because they're not doing that level of research and they don't know as much about the underlying technology. Because the issue is when everything is great, everything's great. When everything is not great, you actually do need someone in your corner who can help you. And we pride ourselves on being that for our customers.
Yeah, and the crypto space being quite young, a lot of things that are not great can happen, or there's a lot of risks of uncharted territories being explored all the time. Let's talk a little bit about Europe versus the US. I saw like a lot of outflows from Europe going into the US after the Bitcoin ETFs launch. How do you see the audience in Europe and the future of crypto in Europe versus the US now that you had like this massive success of Bitcoin ETFs? And in general, historically, there has been like much stronger market in the US, but less clearer regulation, whereas in Europe it is much more the rules are set, and the regulator gave much more clarity. Now it depends which country in Europe, but in general, how do you see the crypto space evolving in the next years in Europe versus the US?
So I think it's really important to realize the US has not moved that much from a regulatory standpoint. They've allowed one Bitcoin ETF. That's great, and it's really important progress, and it certainly helps regulatory clarity on Bitcoin. It means not that much for other assets. We'll see what happens with Ethereum this year. I don't think that's going to open the floodgates to a never-ending list of crypto assets that are going to be listable in the US. So let's just start there. I think it's going to be much more slow than people think. There's this like the floodgates are opening. The floodgates are not opening. This is a limited but critical opening and clarity on a specific underlying asset.
Did you
That
apply
that
for a Ethereum ETF?
sorry?
Are you applying for a Ethereum ETF?
Yes, we applied in the fall.
Okay.
So we should be hearing back sometime in May.
And
Um,
don't you think that if they open the door for Ethereum, then it's like open door for thousands of cryptos out there?
Absolutely not.
Why not? How can you justify, like, if you don't block Ethereum, how can you block the next one and then the next one and then the next one?
Quite easily. The market structure of Ethereum is not at all like the market structure of other assets. They're not looking at the technology layer. That's not the issue. It's about price discovery and tradability, specifically with a focus on things like futures markets. Realize Ethereum is the only other asset that has a significant futures market that's regulated. The other assets don't have any. So they're not the same. It doesn't matter if, well, it's a, layer one blockchain. And so, its consensus mechanism works this way, and then that's fine. That's not the issue.
Yeah, but
The issue is
issuing a
much more about
future
consumption oversight.
like like uh, like tomorrow, and like tomorrow the CFTC can issue 50 futures on 50 new cryptocurrencies. There is no regulatory hurdles into issuing crypto futures. So,
Well, there are some, right? So like the CFTC is still a regulator. They would still need to approve it. You would still need a regulated exchange of significant size to list it. It's not, you would still need sufficient volume. You would need to prove correlations between those markets and the underlying assets. You'd need to prove pricing transparency and discoverability. It is actually not that simple. There's
but all
also
these requirements,
here.
when they issued the first Bitcoin ETFs and Ethereum ETFs, there's a lot of cryptos that are today at the same level that Bitcoin and Ethereum were when the CFTC issued their first Bitcoin and Ethereum futures. And if it's not the CFTC, it's the CBOE, and if it's not, it's another exchange, because no, have so
So the
many.
CFTC is a regulator, not an exchange, to be clear. CFTC is not the same thing as CME and SIBO. CME and SIBO are
Yeah, sorry about that.
regulated
Yeah, yeah,
exchanges.
yeah.
The CFTC is actually the regulator,
No,
and so theoretically, they could approve a bunch of things. But one of the other issues is that it's unclear still today. There's no consensus in the United States today on whether or not some of these assets are commodities or securities or something else. That changes the way in which you are able to issue certain types of derivative financial instruments, including futures. Uh, the futures are only in the CFTC's purview if they are considered commodities,
commodity.
right? So now you're getting into a conversation of like, well, wait a second, what are these things actually? How are we classifying these things? And so it's not, and a lot of that is not about the inherent technology. It's about things like use case. It's about things like how were the initial distributions in the ICO conducted? And I think we will see a lot of clarity come from that out of the some of the lawsuits that are happening in the U.S. right now, especially the lawsuit with Coinbase. between the SEC and Coinbase on the categorization of some of these assets. I think we will get some clarity from that, and that may change this equation. But you essentially need two things. You need the market structure to look similar, and you need clarity on the underlyings in order to get there. And so I don't think this is a free-for-all that's going to open. I don't think that suddenly tomorrow, just because they approved Ethereum, we're going to be talking about Doge. That's not realistic. The European market is certainly more liberal on these topics. We run about 40 funds in Europe. They cover everything from Celestia to Bitcoin and ETH to indexes. We have assets at stake. We have and compound the returns into the product. We have short products, all sorts of different things. I think, but that is stemming from the fact that there has been clarity provided in the European market for quite some time on how they were categorizing these assets, especially with the arrival of MiCA. We're likely going to see an increase in access to these products, and that's not a bad thing. That's just regulatory clarity. I don't think we have that in the US yet. And so
Okay.
it's not going to be an
So to
open
answer my
floodgate.
question, how do you see the evolution of the crypto space in the next years? Like US based or European based or a mix of two?
It's supposed to be global. That's the whole point, right?
Uh,
Like, I don't think there should be a domicile like that, and I don't think we want to see that over concentration. It's not necessarily what's in the best service of the long-term goals of our industry.
and from I would say the user's perspective, like how do you qualify? How do you see the US user versus the European user? Like the journey for a user that comes to you and buys your US Bitcoin ETF or your European Bitcoin exchange traded product. How do they differentiate from one another? The main characteristics, I would say.
They're quite consistent. It's a very healthy mix of retail and institutions in both locations. Not everyone can access all products consistently. So, for example, European retail is not trading US products, US retail is not trading European products. That's, again, a regulatory constraint.
Yeah.
I think with the big institutions, you're going to see allocations across multiple different products and multiple geographies as they look towards having coverage from a time zone perspective and tradability perspective. So I think you'll start to see big managers have multiple products within their suite. I think the European market is structurally a little bit different. The US is a very highly intermediated market, so I think you will likely see more intermediated flows in the US than you will in Europe, whereas Europe does have a little bit more of a retail-driven market in certain places, and I think that will continue.
Okay, I hope you're right, and we will see some more European traditional asset managers stepping in to crypto because the number of US asset managers today promoting Bitcoin and crypto has been like really amazing, and here in Europe we haven't seen any BlackRock type of European-based traditional asset manager stepping in. I'm gonna have to wrap it up today. Thanks a lot for all this input, Ophelia. It was very interesting discussing with you. It's a pleasure talking with someone who has such an extensive experience in the crypto space, and I learned a lot of things thanks to you today. And I hope to welcome you again on the show as soon as you have anything new. Hopefully, the Ethereum ETF approval.
Hopefully. Well, thank you so much for having me. This was really fun.
Okay, take care.